Hi everyone, my name is Edna.
And I'm Mercy.
And this is The Real Conversation.
Your trusted guide in everything real estate here in Kenya.
And we are proudly brought to you by Centum Real Estate, the biggest mixed-use developer in East and Central Africa.
And today we're going to unpack a topic that's relatively new in Kenya, Edna. Are you ready for this?
Yes.
They are real estate investment trusts. They are a really powerful tool, changing how small investors and big investors can get into the real estate space. And we have brought you a very, very, how can I describe her?
Dear guest,
who we have looked for her so that she can let you know how you can get into this space, what you can do, how much you need to, because that's the most important bit. And wait, I'll just let her do her own introduction so that you can see just how special she is and how her career in this space is changing how we do business. So let's do this.
Karibu sana.
Yes.
Thank you, everyone, and happy to be here.
Yes.
My name is Doreen Onwong'a. I'm an advocate of the High Court of Kenya, essentially meaning I'm a lawyer. And my practice is primarily in real estate and capital markets, which is what REIT is all about. Essentially, REIT combines your capital markets and your real estate to bring an investment that you can invest in. I'm a partner at a firm called Kenyan LLP. We assist a couple of firms, a good number of firms in bringing products to markets, whether it be REITs or bonds. Today, we're focusing on REITs. I know it's been mentioned that REITs are new, but, we've had the legislation for the last 10 years, or actually more, since 2013. So probably, but I know for a lot of investors as well, it's really a new thing. So probably hoping that as more REITs come to market and, as we look to share this information, then it can be something we're used to, just like your equities in your stock securities exchange. So happy to be here. And look forward to the conversation.
It's been a long time coming, by the way, Doreen. We have looked for you. She is a special guest.
For sure.
When you see her here, you should actually be clapping for her.
Sit down with a notebook and a pen.
Because it's about to get
very
hot
serious.
And serious.
So, Doreen, something to ease us into the conversation. How did you get to your career and specifically to real estate law and the capital markets?
Yeah.
Okay. So I always say real estate is my bread and butter because it's really how I started. So I guess like everyone else, you have your dreams when you're joining uni as to what you want to be. I always wanted to be a lawyer. And the reason I wanted to be a lawyer is because I felt like I wasn't sure which particular area I wanted to go into, whether it's finance, manufacturing, engineering. But I felt like law allowed you to work in any of the sectors, even the media, because you could always act as legal counsel to any of these sectors. Everyone needs a lawyer. I usually say that. Got into law and, just said whatever path gets me, that would be the path that gets me. And so did my undergraduate degree, did my admission to KSL and got into a law firm for what we as lawyers call pupillage, which essentially is an apprentice where you learn and an advocate. And typically what you find is you tend to take the path that your pupil master leads you to. So that's how I started, with my real estate. So my background is really real estate. A lot of we call it maybe conveyancing at its most basic. You buying land, me buying land, selling.
Yeah.
We're always told all the time, whether you're buying a plot or something, get a lawyer on board. You need to do your due diligence. So that's how I started and got into real estate. Then after that, I actually I moved into a corporate firm, which is essentially a capital markets intensive firm. And that's how now my interest in investments now came across. So combining real estate, as you all know it, I'm buying a plot, I'm buying a house to stay in, plus investments, which is really how do you then turn that real estate into an asset that can generate a return for you.
How long have you done this, by the way?
Oh, wow. So REITs, as a lawyer, I've been, more than a decade in practice.
Yeah.
But if you look at REITs, I think the REITs regulations themselves were published in 2013. So it's been 10 years in the market and around 3 REITs in the market today. So the sector hasn't been very active. But I think we're seeing a little bit of an uptick this year. So probably, we're looking at a couple of REITs coming through, and even Centum Real Estate actually in the near future as a developer. I think soon should be able to release a REIT into the market.
So the basic of things. What is a REIT?
Because there are some people, honestly
many
people have never heard of
even the word
REIT, a real estate investment trust. And also, as you're describing it, sometimes people also confuse it with a trust, like a trust that people use to hold assets. So as you're even explaining, you can maybe differentiate there.
Yeah. A REIT is essentially an acronym or a short form for a real estate investment trust. At its most basic, it's really your typical chama, where investors pull together to invest either, to get certain advantages. For example, you're looking to invest in a resource or you're looking to invest in real estate. Investing in real estate is very capital intensive, especially if you're looking at getting good quality assets.
Yeah.
For example, if I want to invest in a grade A quality asset in Nairobi, just, having the funds to invest in that then can be a bit, on the higher side.
Yeah.
So it allows me with as little as, currently, unfortunately, in the market, we don't have any listed real estate, any listed REIT. But I think, within this year, I think you should have, for example, Traffic releasing a listed REIT. So with as little as, whether it's 100 shillings or 1,000 shillings, I can be a part of or invest in a certain real estate asset and get profit. Then, again, the other thing, then what I usually say is, in the same way, for example, you have in your chama, you pull your funds, you either give your funds to a treasurer, you appoint a treasurer to hold the funds in the M-Pesa account, in the bank account. In a REIT, you then have someone called a trustee, who's essentially a bank. And the bank would essentially open a bank account and hold the funds for your benefit. So you really do have those safeguards and protections because, as you know, then banks, of course, are licensed by the CBK. And then and acting as a trustee as well, they'd be licensed by the CMA. Yes, and then you then do have the benefit of a professional fund manager. Who then is able to spend time and look into the assets and see what do I need to get into, which location do I need to get into, which location in Kenya provides the most lucrative nature of investments, which I as a person may not necessarily have time to do because it takes a lot of time digging into real estate research reports, keeping up to date with the trends in the market. Probably as a person I'd just be looking at, okay, so what's the trending item on
and then
media?
go with it.
Yeah, and then go with it. But that's, we've seen issues.
They
with people,
fail.
whether it's quails or whatever.
Yeah.
They could go belly up.
Yeah.
Yeah. So a REIT allows you to just get the benefit of this person, share the fees that, you have to pay across a good number of people so that the fees are not a burden and get a return on your investment.
Yeah.
Yeah. And again, as well, ease of exit. So, in Chama, we decide to buy a plot today. I want to exit. I have to look for either, for example,
Someone
it's us,
to buy.
you to buy me out. But if it's a listed REIT, the same way you buy shares, for example, for Safaricom or Santam, then you can't sell on the stock exchange. You just need to put a sell order on your, with the stockbroker. Yeah. So really, that's the best, the basic form of a REIT. I think the issue with Kenya at times, and we've done some, we did some analysis with this with FSD. I think if you look at most countries, REITs, the trust concept at times could be confusing. So REITs in other countries typically started, for example, as vehicles called property funds, which is very easy to understand. Because it's a fund through which you invest in property in the same way a money market fund. I'm sure maybe most of us would be in a
one.
fund rather is a fund through which we put our money and that money is invested in money market instruments and you can get your cash out. You have an equity fund, for example. I want exposure in equity securities, whether it's shares in Safaricom, and I want to do it through a diversified port because I can't do it with my 1,000 in alone. So I invest in an equity fund. So it's a fund that really is just buying equity securities. So a property fund, that's what most jurisdictions used to call the REITs. Before now, with time, because now the way with time you see we're a global community. We're looking to harmonize. So that's how REITs then come along. How do we harmonize this property fund? So you have jurisdictions like South Africa. So for them, that's why you'd find their markets are a bit more developed than ours. Because, there was a step growth. This is what they used to call property funds, and now these have now evolved into REITs. And even recently, actually, very interesting conversation. And someone said, for example, in the US, the reason they're called REITs is because initially they were trusts. Yeah, but with time, then of course the US looked at a situation or a position where now this real estate investment trust could now be companies that invest in real estate. But now the name stuck. In Kenya at the moment, REITs can only be structured as trusts. But I know that what the Capital Markets Authority is doing is reviewing that piece of legislation to allow for different types of entities to be able to be considered as REITs. But from an investor perspective, does the nature of the entity impact me? I will not think so. Because for an investor, what a trust does is that if you invest in a money market fund today, the underlying vehicle is a trust. It's just that it's not called a money market investment trust.
Yeah.
So essentially, a REIT could be a real estate investment fund.
Fine.
Yeah.
Yeah, so it's just the word trust that makes you think, what is this
What is
complicated
this, all this
thing? What is
thing?
this
Yeah.
complex thing? But no, it's not. When you look at a REIT, think about your money market fund. It's still a real estate investment fund. Yeah.
And I think this is going to be like a basic question, but let me give you background. People in Kenya, if they invest in real estate, someone wants to see the house. Someone wants to see
Actually.
the plot of land. So I'm sure now as we're talking, you cannot actually own the units or the property that the real estate investment trust, like you cannot physically go and claim it. So what do you think about that, by the way? And what do they call your share? Is there like a specific name for a share in REITs?
This is a good conversation because, it's really digging into,
Yeah.
REITs are the most basic form. So you do own at the end of the day the underlying asset. You just own it indirectly. Not directly. You don't have the title. A million of us can hold the title. You own a share in the vehicle that owns the real estate. So if you want to see it, for example, if you're investing in a REIT, for example, if today Centum issues a REIT, or whether it's an affiliate of Centum, and you want to see Two Rivers, you can go see it. And I'm part of this. It's just that for administration, given on the fact that it's a big number of people, it's a pooling vehicle, the title will be held by the trustee, for example, in this case. And the trustee is typically a bank. If you look at CMA requirements right now, actually to be a trustee, you must have at least 100 million in terms of paid capital. So typically it would be, for example, your bank who would be a qualified trustee. So that's the person that would hold the title. And why they're holding it, why we use the word trust, is because they're holding it for your benefit, for the benefit of each and every one of us who's invested in the REIT. Yeah, so you do participate in the REIT in terms of decision making. For example, the way the REIT is structured is there are certain decisions that the REIT manager, who's now the equivalent of your fund manager for a money market fund, cannot make without the approval of you as a unit holder. For example, I'm buying an asset. The asset must be valued. So one, that's a very good protection because, every time in Kenya, there's that conversation around our properties properly valued. These properties, before they're purchased by the REIT, the regulations make it mandatory that they must be subject to evaluation by an independent valuer. If the manager wants to buy the property at a value that's, for example, 10% above the market value, they have to come back to you as a unit holders to make that decision. So there are protections in place. So in the same way, for example, I'm a shareholder in EABL or Safaricom, and I do go to an AGM. REITs must also have AGMs. REITs also will publish your financial statements on a half year basis and an annual basis in the newspaper. So it's a vehicle that we used to. It's just that it's just like, I'm investing in Safaricom shares. Am I going to an AGM? Yes.
Yeah.
Who's managing my assets? In Safaricom, probably there's a board of directors, there's management.
Yeah.
Here you'd now have a REIT manager who would have a board of directors and its management. For example, something like, Centum Real Estate can be, a REIT manager. Essentially, its board will be, day to day, and then the management as well.
Yeah.
And then, of course, you have the trustee, who's the bank, who now acts as almost like an oversight and ensuring compliance.
So it's the same way I can say I have shares in Safaricom, but do I own Safaricom?
Yes,
and no.
Or like the towers, whatever they call
Yeah.
them. Like, you own.
You can say
Yes.
Yes.
kinda.
Yeah.
but
But you
not-
won't
yeah.
go to Safaricom saying Fungweni Milan.
Yeah, or give me Safaricom house, for
Yeah.
example, where I want to sit and
Yeah.
hang out. Yeah.
Okay, that's easy. I
That's
feel like
really-
that's easier explained like that.
When I was doing my research about this, because I want to look smart also. So when I was doing my research about this, I saw that there are different types of REITs in Kenya. There's something about I rate, D rate, and today you're the teacher, so tell me more. Teach us about the D rate, I rate.
Yeah.
And recently we had a conversation about Sharia.
Yeah.
Sharia compliance in mortgages. And if you haven't watched that episode, go back and watch it. So are there also REITs that are going to help the Sharia?
Yeah, so typically REITs, the most common and the most globally accepted type of REIT is really an income REIT, which is essentially a REIT that owns income generating property, meaning buildings that are delivering income by way of rent. And it's that rent that is then distributed to you as an owner of shares. Let me just call them shares in a REIT. And the REIT does this through a dividend distribution. And one of the things about a REIT is, unlike, for example, a company where the directors determine the dividend policy, here it's actually within the act. You must distribute at least 80% of the income that you receive in a year.
Wow.
So almost like, if you're investing in a REIT with a good portfolio or a good quality of assets, you're assured that, you get an interim dividend and a final dividend. Because as long as rent is coming through, they have to retain at least 80%. And if for some reason the REIT manager, the trustee feels, no, we will not, then, those reasons have to be explained. But to actually maintain their tax exempt status, they must distribute at least 80% of their income. And that income, provided the REIT meets certain provisions that are the act, is actually exempt. So it's actually now a tax efficient vehicle, now putting you in the same position as if you'd invest in your personal. And then now when it comes to it's a dividend, there's this, if you're a tax exempt investor, of course, no withholding tax, but else it comes to you and the 5% withholding tax dividend is fine.
Okay.
Okay.
And so those are your income REITs. Then income REIT, for example, you asked about Sharia compliant or Islamic REITs. So there is overall perspective where you can now have your Islamic or your Sharia compliant REITs, which are essentially REITs that are compliant with Sharia law. So, for example, a REIT of that nature would not acquire a building that probably has a place that probably sells pork or alcohol, something that's not halal. So that would now be suitable for investors who are looking to get a Sharia compliant REIT. The next step. So there are just really two legs, income REIT and a development REIT. So a development REIT, and maybe for an income REIT, I would give an example. For example, if Two Rivers, either one of the towers, wanted to do a REIT, because those properties are already generating income, then they would be put into an income REIT. Then you have a D-REIT, which is a development REIT. So a D-REIT is supposed to raise money to build, to develop. So, for example, Centum Re, which is building Zizi, for example, in the process of building it, could now actually put out a development REIT, and then that you're paid out when that asset after it's built, it's sold out, or based on capital gains that come through the property. So those are the two types of REITs, and then now you have the Islamic REIT, which is now a specific type of REIT. Either an income REIT or a D REIT can qualify as an Islamic REIT as long as
it's following Sharia
compliant.
So I have a question. Some people might call. But anyway, let me ask because I'm here today
to learn.
So the D rate. So let's say the D rate is like the chama. We are pulling money and then we build a property. So once the property is done, the D rate work is done, or we can convert it to an I REIT, or we have to create a whole new I REIT so that we can own this and get income generating property.
So it's essentially, you can create a pipeline, and that's why it's important to get the skill that you only get when you pool investor money together. So that's where the REIT comes in. So once the REIT comes through, either you can have a pipeline of real estate assets. So if you have a developer like Centum Real Estate, they're consistently looking for opportunities or places to build, places to return. So they'll have a pipeline. So it means you don't have to convert, or you don't have to form an AI REIT. But then where is your exit? Because the D-REIT's purpose is to build. So once it's built, then there are two ways to handle it. You either sell to individual buyers, as for example you would, or you could actually sell it to an I REIT, meaning the I REIT now holds the asset. And for example, now the I REIT is able to now lease, get tenants and lease on a long-term basis. So you can exit the asset either through sales to third-party buyers or through a sale to an I REIT, meaning you can then form a D-REIT and an I REIT. If you only form the D-REIT to develop one specific asset and you don't intend to develop a pipeline, then you can convert the D-REIT to the I REIT, because at that point your intention is not to sell, your intention is to develop, then retain the asset. So essentially, I'll be getting my money back as you're getting in your rental on income. So it's the same way I'd build a flat, then I'll get my income through the rental payments that come through as I rent it to people. But now
So it's important to have an exit in mind, even when you're starting.
And that's really good. Yeah. And that's it's important to have the REIT manager who's a professional. Yeah. Because now those are the things they think about, and they're able to identify what's the most optimum way to exit. How do I get the best prices? They're able to use their networks, to get an exit mechanism. Yeah.
Okay. Hiya.
Okay. So the next question would obviously be, let's talk about I REITs and D REITs. So the next question the person out there will be asking is, how much do I need to invest in an I-rate? Let's start there first. And then maybe the D-rate now would be for the developer or whoever. But let's look at both at the moment.
So you can invest in both, and I-REIT or a D. It just depends on availability in the market.
Yeah.
So for an I-REIT, really, if it's a listed I-REIT, there is no, as long as you have the minimum limit that is required to hold the security for a listed security, you can invest as little as 100 shillings at this moment in time. But there are currently no listed REITs in Kenya that are open to the general public for investment.
Okay.
Yeah, and that's what I'm saying now. Once Traffic, which is a subsidiary of Central Marie, brings in the Traffic REIT, then at least that would be available. But that one would be a USD denominated REIT. But still, I think with around 10,000 Kenyan shillings, you should be able to at least get a unit or a share within the REIT. So if it's a listed REIT, if it's a listed income REIT, then ideally, as the market grows and you get more REITs in the market, you can come in whatever
Capacity.
you have and get a share in the REIT. For D-REITs, the because of the risk, because when it comes to development risk, it's a different type of risk. As I said, for an I-REIT, you already know we're not taking, there could be construction overruns here. It's assets that are already built. They have tenants probably. It's just generating income. But for a D-REIT, so initially we had a minimum investment of 5 million shillings. It's still retained, but what the CMA has done, just recognizing, the need to allow more investors to come in, is that they have reduced the minimum to 100,000, so long as the REIT is actually listed on the Nairobi Securities Exchange. So unfortunately, currently as well, we don't have a listed D-REIT we don't have a listed D-REIT in the market. Hopefully, since I'm Real Estate will bring one soon.
Yeah, we know we are trying better.
Yeah, so as an investor, you can have, and typically, because, a D-REIT may actually give you a higher return. Yeah, so you can be able to just diversify your assets and get some exposure to a D-REIT based on your risk profile, and some exposure to an I-REIT as well.
As usual, higher risk, higher return. Most times.
Most times. You just need to ensure you have the right, people at the back of it. But so at some point, probably, once, we get a D-REIT, for example, you have Santa Marie D-REIT and an I-REIT by Traffic Nota, you can just see how you balance your portfolio. You have some exposure here, some exposure here, some exposure in an MMF. So at the end of the day, it just comes back to how you construct that portfolio. Yeah, but hoping we get a D-REIT and I-REIT with a
Santa Marie tag. So I know you've mentioned that there are some REITs that are not listed, but Sahi, are there any REITs that someone can look into? I think the one that we've seen the best performing, I think, so far is the one that does student accommodation. So I don't know what your thoughts are, maybe where someone can start, and even how student accommodation, it's a very big deal, how they are performing currently.
So while there is no listed REIT, there is a listed REIT, but it's close to investment, which is the REIT that is done by Lab Fund. So it really sort of available to you and me as retail investors. They still, we used to have the Stanley Fahari I-REIT, which is now the Island Fahari I-REIT, which was delisted from the exchange to allow for restructuring of that REIT. There is opportunities that exist. There is a platform that is done by the Nairobi Securities Exchange still. It's just sort of the main investment market segment, which is called Nairobi. It's called an unquoted scripts platform. It's called the NSC USB, which is essentially an over-the-counter market where you're able to buy and sell securities. So, for example, you could have certain companies, especially for the way the NSC structured is, you could have such certain companies that are not ready to go to the main market, but would still like to be able to provide a trading platform for them. And actually, some of the people they were targeting, and I know is ZACOs, for example, your cooperative societies. You hold and you just stuck in there. You cannot sell your securities. So it's meant to provide a liquidity mechanism for that. So there are certain REITs. Actually, there's at least one REIT, a D-REIT and an I-REIT, which is actually quoted on that particular market, which then provides a means through which you can, of course, access that. And again, for REITs now, the reason as to whether I list or not, then is what really determines where you're going. Because when you look at REITs, and if you look at the experience that's been there, just because of maybe lack of familiarity with the market, or just, and I guess maybe it's just a risk that comes with listing.
Yeah.
Because, for example, today, and that's why, for example, you'd see when an entity is listed, certain information comes out to the market, they issue something called a deal with care. Because for retail investors, for investors like you and me, when I see something in the newspaper that's a bit worrying, I could be running to sell, which then affects the price of the so your prices could really fluctuate, go up and down. So for certain REITs, just to avoid that exposure to that fluctuation, then the REIT is not, because if you listed, you must expose yourself to the risk that my pricing will be determined to some extent by market sentiment in terms of how well I'm doing, and not necessarily by the value of my assets. So Doreen sitting where she is, we just, Mercy, we just sit and say, we don't feel like this one is doing well. Maybe let's get our money out. And just, so you're willing to maybe sell at a discount, get it out, and that now affects the price of the risk of the REIT without not taking into account the fundamentals of the REIT. So based on that, we have REITs that are now quoted on the NSE USP, which means you can actually then access, whether it's through your stockbroker or your financial advisor, get access to certain REITs. So for those particular REITs now, the price is determined in the same way you would, for example, for an equity fund, where they do a valuation of the assets and the price is based on that. So they don't take into account the it's not subject to you and me and how
and our
at any
sentiment
particular point in time. So you can access through the NSE USP. You can access the existing REITs in the market. I think, as I mentioned, we do have. I know for Harry, REIT is actually on the USP. Actually, currently, all REITs other than Lab Fund, which is listed, are on the USP. But some may be closed to applications at the moment. So I think it's just a discussion you have with your stockbroker or your investment advisor and get access. Hopefully, with time you can, in the same way you can go into an app and invest in a money market. Probably we should have
a one for it. And talking of risks, I think one of the main things investors consider is returns. How are the returns looking for the ones that are there? How are they looking? What are the percentages?
So quality of assets is important. So if you're looking at a yield of between 5 to 8%, it's a good yield.
It's a good
because then there's consistency in terms of distribution, and especially, for example, if you're looking at for example, now maybe I'll just speak about the terrific REIT. For example, if that comes through, it's it's a USD REIT, and you're probably looking at REITs of at least a yield of at least 8% per annum, which is higher than a fixed deposit account yield. And you're getting that on a for USD based instrument. So so I think it's the returns would vary, but I think if you're looking at a yield of, for example, 8% per annum on a USD denominated instrument, that that's fantastic, and it's something you can look at, because at the end of the day you need a diversified portfolio, but it also needs to deliver return to your investors that probably at least at a minimum beats inflation. So
you can check inflation.
Performance is I think over the last 2 years has been good, and I think barring a COVID, then it looks good going into the future. I think it's just the right time.
I feel like we've mentioned Triffic so many times, and someone might not even know what Triffic is. Because people would know, people from Centum, if you follow us and you like us, you know what Triffic is. But Triffic is Two Rivers Innovation and finance.
What?
Yes, I will put the name there, but it's a member of the Centum group, our mother group, and they are in plans of setting up an REIT. It's an REIT, a USD-based REIT. So that's just, by the way,
the basics. It's a social economic zone, technically.
Higher.
And, now looking at REITs in Kenya, you said it's been here for 10 years. I want to go, in an ideal world, how have we grown in that sector? Where should we be in the moment, despite any barriers that there are? Because now we'll come to the gaps that you're seeing, and where do you think we should be headed in an ideal world? So where have we come from? Where are we at the moment? should there be more awareness, those kinds of things? What do you think are the barriers, Zina, to prevent from getting to where we want to be, and how far have we come?
So we are definitely not where we should be.
Yeah.
Definitely not where we should be. And probably because, at times they say, and I'm a lawyer, but at times they say innovation is a good thing.
Yeah.
Allowing innovation to happen, so almost having like a mechanism where innovation happens before you regulate. But there just needs to be a balance around that, because, probably the balance that was gotten with M-Pesa would have been the right one. So because in Kenya what happened is the REIT was introduced to the market by regulation.
Okay.
Yeah, so regulation came through, but the market had not really, started, understood it.
Yes.
Or understood at least at a minimum what property funds are like in other jurisdictions. So we have significantly lagged behind as a jurisdiction. That's why today we're speaking and we're saying the only listed REIT at the moment is, the Lab Fund REIT, which is closed to you and I can get access to.
Yeah.
You can get access to Centum shares, for example, on the Securities Exchange. So definitely that's not where you'd want to be when you're celebrating your 10th anniversary, which we did in 2023.
Yeah.
Definitely want to be in a better position. So a lot of it has had to do, in my view, with so where do I think we should be? Definitely we should have more REITs in the market. Investors should have choice. Because REITs have such amazing benefits, whether it's from a tax perspective, diversification, professional manager, the regulatory framework around it. We should have access. So I should be able to, for example, invest in a REIT the same way. Someone said MMFs were the it for last year.
Yeah.
I should be, and the reason for that is, in my view, primarily tech. Of course, there's the rates and the yields just going up, but as well tech, ease of access, because I can go onto my phone and buy
an MMF.
And invest in an MMF, and you can see your money. So probably you need a situation where your REIT manager, your fund manager, probably through an app, I can be able to get the benefit of a REIT security, and that is even general, even when it comes to and I know a couple of even stockbrokers are working on that. So it'd be cool if technology. I think for me, technology has to lead, because having to go to your stockbroker, for example, even if there was a REIT on the exchange, right, you having to go to your stockbroker looking for an FA, then send forms can be. So I think technology has to lead, but as well the regulatory landscape needs to be much better than it is currently. Because you see, on the other side there's a demand and supply side. So yes, you have the investors like us who are like, when are you bringing a REIT to the market? I want to be part of this, but there's no availability. But there's also the people with the assets that feel like they can bring the asset and share it with the rest of us. So they need to there needs to be a balance in saying, okay, so if I'm bringing my asset to am I then just selling it to a trustee? And there needs to be that, can we allow other forms of entities, like for example companies and LLPs to invest? Because for example, if you look at your public companies, your listed companies, they hold millions and millions worth of assets, but the assets are held by the company itself, because that's what companies are actually created for. So why does it have to be that if I'm doing a REIT, then I have to vest it in a trust? So there's certain regulatory changes that probably need to be looked at to make the market. But as I mentioned, I think CMA has the reason, but just issued a notice and said, so what do you think we can do to make this work and work better?
Okay. And when I was doing my research, something interesting, I went to TikTok today morning, just because 80% of Kenyans are on TikTok. Your Shamba boy Ushago is on TikTok. Your boss is on TikTok for whatever reason he's on TikTok. You are on TikTok probably, or even Instagram. So I went and searched REITs in Kenya. A very simple search just to see who is creating awareness. There was only one video, and she started the video off, and there was supposed to be a part 2, and there wasn't any. So I think another thing that's missing in terms of even the demand is the awareness, because your grandfather might have 5 million, but he doesn't even know REITs exist. He's on TikTok probably watching his fun videos. And one day I hope this video will pop up on his screen, and instead of putting it in a chama, they can put it in this chama, right? So I think that's also a gap I saw today morning. I just wanted to know, okay, is it that I'm the one who's not looking in the right places, or is there no place to look at?
It's good we're playing our part in terms of putting the information out there. But there's a significant information gap. And now it's easier to disseminate information out there. You don't have to pay for a TV ad or for a newspaper ad. Put something on TikTok that we all can relate with. So it's really just for all of us in the industry, whether it's your real estate or your investment professionals, demystify REITs. Don't make it don't make it
too hard.
Like, what is that? So I think, and happy we are playing a role in that conversation. And just
there's something you mentioned I just want to go back kidogo. Taxes, please. Please tell me what taxes
benefits
are these that are exempted from.
Okay, so I know you said a REIT. So the REIT, I feel like I should be drawing on a board or something. So currently, as I mentioned in Kenya, it's essentially formed through a trust.
Yes.
Which means there's a trustee, which is ideally probably a bank, and there is a manager who now the trustee is actually holding the assets for your benefit as a trustee, as the holders. Then the REIT can elect to hold the asset, which is the building or the piece of land, either directly, meaning the title would have the name of the trustee. For example, if for some of you, if you've seen a title which is held by trustees of church, it would say, X and Y as trustees of. But the other option, which now most entities now prefer that are REITs, is to hold the asset through an investee company or a trust, or an LLP, meaning then the land or the asset is actually held by now a company. So what the tax benefits that REIT has is REITs are income tax exempt, meaning if I'm holding an asset through a company, I'm subject to a corporate income tax rate of 30%. For a REIT, as long as it meets certain conditions, which are in the process of being aligned, for example, that income distribution requirement, they're able to get an income tax exemption, meaning the rental income would flow once the tenants pay, the rental income comes in, flows to the trust and direct and to you without any other taxes. The only tax that would apply is a withholding tax of 5%, which is a final tax. So you don't have to struggle with residential rental income trust.
Am I right?
And now the filing nowadays, because KRA is cool. Now
but
the compliance obligations are now
very high.
You have to report even as a landlord, and you're just like, am I willing to every month
all that
filing, you're remitting? The REIT removes all that just because you have a professional fund manager and the tax exempt nature of the vehicle that's holding the REIT. So as an investor, once I receive my income, also when you're doing your annual filing, when you're all rushing at the end of the year, and at times you've done something and then it's telling you, but there's this thing that there's this money you received, please, it stops you because you have a withholding tax. This one is a final one, so there's no additional filing that is available.
That's really good.
It's really nice because I would like my investment to be as easy as it can get. I don't want to be filing too many. That's why I'm investing. If I wanted to, I would have built something small. With that 100,000, I build a shop or something. But since the essence is to have investment is something that will work for you when you're relaxed in your
exactly. It's passive income.
So I want to ask now, since we are the ones doing the sensitization here, what are some of the red flags? Let's just list them. Some red flags that at least we can cut out and boost to social media and tell people when you're starting your investment journey in REITs, these are some of the risks I think personally you should look out for, or this is an area you need to do more research, more due diligence.
So I think it's a good thing that REITs, to start with, are regulated because you could invest in real estate, for example, but through an unregulated vehicle, which may take a little bit more risk than you would like, and you end up being in an uncomfortable position. So I think as a start, it's a good thing that REITs are regulated. And if you look at any prospectus, so essentially because a REIT is offered, for example, for people to, the same way, for example, we had the Safaricom IPO. When a REIT is initially issued, they would have that prospectus or essentially offering document. So that would set out the risks that you need to look at. Yeah. So for investor one, I think the track record of the REIT manager is very important, and it's one of the things that you'd look at based on their previous experience, other things they manage. Because if you look even at Kenya, if you look at most of the REIT managers, most of them are actually already fund managers.
Yeah.
So you want to look at their track record. You want to look at, the kind of brand that they are and whether, it's something they're comfortable with. I think the other thing is really that I'd also be keen on is, currently, of course, I've said, we don't have a variety. But again, I think at times looking as well at, it's, a REIT at the end of the day is a security, but, you could also, have a view in terms of how the underlying assets are. And see how that goes with you. But for me, I think the most important thing, and as REITs, the market becomes better, then you could be able, for example, to see the performance of a REIT over the last 3 or 5 years.
Yeah.
So that's one of the things you looked at in terms of historical performance, because then it speaks to future performance. And of course, we always say historical performance is not an indicator of future performance, but at least it shows
good,
you what the capabilities are and what this has done before.
Okay.
I think for me, those would be the primary way in terms of which you access it. And I think with time as well, the same way, for example, in a money market fund, you have the fact sheet. The fact sheet will be telling you what are the important things in a condensed form that you need to look at for a REIT. You look at the REIT manager, their credentials, who's managing investment. You look at its history. You look as well at something we call the management expense ratio, which is essentially the operating costs of the fund. So because then at the end of the day, the operating costs of the fund impact how much you get.
You get
So the higher it is,
the less you get
the
back.
less you get at the end of the day. That's why even when it comes to investors in money markets, it's usually like, are you reporting net of tax or net of fees? Yeah, because it's a very important conversation, because at the end of the day, how prudent your fund manager is impacts what you get at the end of the day. And then with times, for example, for an income REIT, because it needs to be able to prove consistent income distribution. So for a REIT that has a proven track record that distribution is stable, it's always at a certain level, and that's something you definitely want to look at. But just because of where I think key thing is, who's your REIT manager? What is their competence? What's the team around it? What's the experience? And what's the experience?
Okay, so this could be a very basic question, but we're looking at all these things, but where do we look at them? Where do we find this information?
So there's something we call an offering document, which is essentially the person who's establishing the REIT coming to you and saying, this is the investment I have for you. So that would be a very long form document, which would have the risks, how they are mitigated. You could even access the legal opinion if you wanted, the valuation report if you wanted. It would have the description of the REIT, what I'm targeting to distribute, the buildings I have. And that's why I'm speaking now. I hope with time I will have something called a fact sheet, which is a very simple, condensed one-pager where I can get at least the highlights. But of course, with the disclaimer that at the end of the day, you should read the
main thing.
Thing. But for example, even for the resale in the market, if you just go to the website or even the NSC website, you can actually get an offering memorandum or a prospectus for a REIT. And
you can see all the detail.
So check out NSC website. If check out the website of that particular entity. Nowadays you don't have to walk to a stockbroker this items. So for any REIT that comes to the market, that information will be available on the website.
Okay, I think we've covered most of the things, honestly, because it's still a growing market. It's still, so I can see the potential, but I want us to do meets like quickfire round
questions.
Just tell me yes or no, because I had written.
Like I need to prepare. I get ready for
the first one, and then the second one we go like this.
Hiya. I say one, you say one.
Yes.
Hiya. Rates are only for the wealthy.
No.
Okay. Rates are too complicated for beginners.
No.
You can't make real money unless you own physical property.
No.
REITs don't pay good returns compared to land or apartments.
Oh, way better returns, no.
Higher. Rates in Kenya aren't regulated, so they are risky.
Oh, not true.
Yeah.
Okay, it's better to just buy land because land never loses value.
We will talk
Depends.
about it. We will talk about it.
But through a REIT, you get to own the land still. So,
Yeah.
yeah.
Higher. You need to be a finance expert to invest in a REIT.
No. Yeah. Your professional is your is a REIT manager.
Kenya's REIT market is too small to be worth
Oh
considering.
no! In Africa we're one of the biggest economies. Yeah, East Africa. Yeah.
Let's talk
Maybe the right place
about
to
this, by the
And you
way.
see, Nairobi has among the most expensive real estate. Though I know there's different views around that.
Yeah.
Yeah, but in terms of green buildings, grade A buildings, we're actually leading the market. And if you look at the UN and everything, it's a fantastic place to be for real estate. Our growing population.
It's the next best place
like you guys
to be.
If you didn't think about it yesterday, please think about it today.
So there is a lot, because now I think one agreement we can all have is more information needs to go out there, and people need to be more cautious and just do their own research, not usikwe lazy.
I don't think any investment.
Yeah, just usikwe lazy. That should actually be the motto of any investor. But do you think, as we come to a close, do you think someone who is just starting their investment journey, like just a young person, is it wise for them to start in REITs, or they can save, look for other investment vehicles? Now, let's say apart from owning property, now, big sister advice.
Yeah, I was actually just thinking of my small sister right
Yeah.
now. And would I tell her to invest in a REIT? I would, because I'm a big proponent of having a diversified portfolio. If you have your 100K, whatever it is, and put it in one investment, then, it may not be ideal. If the investment goes belly up or prices change, then, you lose. So I think for me, because I'm a big proponent of diversification, and just because as well, when you're young, you have a longer investment horizon.
Yeah.
So for REIT, one, you're assured of a dividend half yearly, and which you can reinvest. And it's not to say put 100% of your money in there. But put some in there, and there's a little bit of patience. But it's a good way to diversify your asset, because probably you probably can buy a plot.
Right now.
And for me, I'd say do not buy the plot now. But you want exposure to real estate, then the REITs are the best way to get exposure, because you don't have to put so much.
Yeah.
And if you need to exit, you can exit, because there's a liquidity mechanism through which you can exit. And then you have someone else who's because when you're young as well, you need to spend so much more time on whatever you're focused to do, whether it's your career or your business. You don't want to start looking for, focusing. So it's a fantastic way to get your passive income, because then you have the REIT manager looking for your interests. So I'd put kidogo. Yeah, but I definitely advise that it's a good thing to have a part of your portfolio.
Edna and I are staunch believers of, if you can have someone do it for you,
Kindly.
Now, I like that
Do
REIT
it.
has a professional
Yeah.
fund manager. I like that they have a trustee. Like, I like Edna and I will pay lawyers. Like, you take all our money.
Do the work.
Do the work.
You went to school for that.
Exactly.
Yeah, like, do it for us.
Pay
So
your professionals. I always say,
Pay
pay
your
your professionals.
Exactly. Yeah.
So I really like REITs for that, that it has a fund manager who you can go do your research and feel confident that they can protect your asset, your investment.
And for me, there's one thing I would like to tell anyone out there. Let's say 5 years ago, maybe I'm the one who's too young to know these things, but 5 years ago, MMFs were not popular. Now everyone is rushing in there. The people who are there before, they gained what they needed to gain. Their returns were high, and they're still there for a reason. So if you think rates ni kidogo sahi, find me 5 years from now asking me mbona sikukuambia. I'm here telling you now.
Yeah.
If you can, and everybody, I feel like everybody can, invest in REITs. Ask questions. Ask us questions. We'll direct them to Doreen. She will tell you what you need to know. You can sit on it, stew on it, but at least the information now is out there. I don't think Kitambo podcasts were not there when MMS were being popular. TikTok was Musical.ly at the time, so it was mostly for dancing. Before COVID, I don't think there was a lot of education on investments in video format. Instagram was for tips and all the good stuff. Yeah, picture perfect. X was for whatever goes on X. We didn't even have threads. Facebook was for stories and a lot of selling, Facebook Marketplace and all that. But now we are here with this information and we don't want anyone to be left behind. That's basically why we started the podcast. We really don't want anyone to be left behind. Want to move forward with everyone in the real estate industry, however that looks like for you. Twende tukiendanga. So yeah, please, if you can, invest.
And I think as we close, Doreen, it would be nice for you to close for us and maybe just, I know you've mentioned it, you've mentioned a lot, but just to close, some of the comments, sentiments, things you'd like to see happen in REITs, just
what you'd like people to know that
what you'd like people to know
about.
And
plug yourself
also.
Well, I think you guys have said it all. I think it's been an amazing conversation in terms of and I hope probably this is better. You could probably have the next one once the REITs are the market grows. So I think investor education is key, and for me, important that this is happening. So I think let's try as much as possible to get information out there. And just as you're speaking about now information is available on TikTok or Facebook. I just remembered back then when I was in uni, and it was a long time ago. And I remember it got to a point where I would find it, rather than go to the library, I'd be able to get resources online. And for the units that I did that way, those were where I performed exceptionally, because I'd be sitting in a matatu going to Ronga and reading a random article or something of the sort. Now you can even get the information on Facebook, TikTok. So the information is available. You just have to look at it. You just look for it and find it. And the concept of a trust, because I know the first question must ask me, is it a trust? Should not phase you. Because probably if you already are in an MMF, you're really investing in a trust vehicle. Yeah. So it's just a vehicle that is preferred by the Capital Markets Authority at this point to ensure your interests are protected by having an entity like a trustee hold those assets, as well as do ensure that the governance is right for you. So I am looking forward to the upcoming REIT, just to invest and put, but getting exposure in REITs is a good thing, and it's a good way to save, probably to save, and probably at some point, or to keep money away to invest. Maybe the best thing to say is to invest. And if you at some point you need the money, at least there's some liquidity that is provided. I always say, even in my younger days and even now, the greatest thing I ever wished for or wanted was discipline, because a lot of us struggle with the discipline of investing and putting money aside. So, and things like REITs now, because you see, at times it's just, once you put it there, then getting it, as long as you don't have an urgent need, is a bit, easy. So it's the first step is, getting in, invest, start looking at information. I think in the next, because there's a recent conference by the NSA, I think you're looking at almost 5 or 6 REITs in the pipeline. So maybe 2026 will be the year of the REITs. So don't be left behind. Start reading. If you need more information, feel free to, to start looking into it, so that by the time we have all these REITs available in the market, and I'm actually pretty confident that as you go towards the end of the year, 2026 really will be looking into the year of the REITs. Someone said 2024 is the year of money markets. This year is probably the year of the special funds. The year of the REITs. So don't get left behind. Catch up. The regulator, I know, is doing its bit in terms of, one, clarifying the tax framework, just ensuring it's aligned in terms of, as a REIT, what do I need to do to be tax exempt? As well as, now that they've called out for public participation, now we can all put in our information in terms of how the REIT space can actually be made a little bit easier, because at times the barriers of entry are also just the cost of getting a REIT to market can be so high, so that not everyone can get a REIT into market. So for example, you need someone like Centum to go and say because the initial cost of setting up the REIT must be borne by someone, getting the lawyer on board, getting the transaction advisor, getting your auditors, because you have to have everything in line. So those costs can be pretty high, and that's okay. But yeah, I think there's been lots of progress in terms of how do we make this easier. And even the World Bank itself has been having a program in terms of if you're looking to get into REITs, we're literally going to provide you with a suite of documents that will help you make your journey a little bit easier. Yeah, so I think we're getting there soon. We may reach the levels of, I know South Africa is the leading
so far.
is the leading entity in the market in Africa. And, we are always just a step behind or maybe ahead. So it's really the time for us as Kenya to now, show the rest of the,
We're going to have this conversation again.
Yeah, we will soon.
Yeah.
Especially, I feel like when Brenda comes in, we're hoping that she'll be coming in here. Yeah, so at least that's a conversation we're going to have. And one thing I have heard you mention, and I think it's important, people, especially, I've had my parents say this, ni ngumu kuuza shamba. And you've said liquidity. This offers you liquidity in real estate. You can opt in and opt out. Things do happen. You might need to pay a very big bill somewhere. You can liquefy this easily, I'm taking, instead of putting out land for sale somewhere. So I think that's also an advantage we have with REITs among many other things. Yeah.
Because you just need to, put a sell offer and get buyers to buy. And because, it's smaller units, then it's easier to sell so that you can sell to a larger number of people. For land, you probably need one buyer.
Yeah.
And the price is what? 2 million, 3 million, 5 million. This one you can get like 2 or 3, 4, 5 units out of the market. Yeah.
So I think this is the end. Thank you so much. Thank you so much for demystifying.
I feel like I've been in class. I should
have had a notebook. Thank you for demystifying REITs, for shedding light on the benefits. Personally, I feel, how can I say, enlightened by the benefits. So thank you so much. I hope it has sparked curiosity in you, and at least now REITs is not just a buzzword. You can get in touch with us at Adna and I, and we will also attach Doreen's profile in the description box, so be sure to check it out. And
you can check us out on The Real Conversation Podcast KE on TikTok, Instagram, Facebook, and on YouTube we are at Centum Real Estate.
Yes.
And with that,
thank you so much. See you next time.
Same time, same place.
Bye-bye.